Shantanu Khosla, Managing Director at Compton and Greaves Consumer Electrical, is with us. Sir, just before we start about the numbers, what has happened? You have looked at the FMCG sector for really a long time now. You would, by far be one of the, oldest hand in the industry. Can you just tell us, with this slowdown, the sort of commentary coming in from HUL, from Dabur, from a company like HDFC Bank on retail assets, what do you make of this slowdown?
Well, definitely I believe that there is some impact in rural spending and rural markets. And as I suppose most of you know, a lot of the past period's growth was coming by really strong growth in the rural area. So that does seem to be a headwind right now.
What is needed to take that up, and then we can focus on Compton numbers?
Well, like all things, I believe from a company and brand owner point of view, it is providing good value propositions which really mean and add value to the consumer, and then distributing them, and being sharper on value, being sharper on cost, making sure you continue to invest even in tougher times, normally plays out in the long run positive.
Okay, just want to understand, Mr. Khosla, how have you been adding value to your consumers in a tough environment like this? Because going by your numbers, we've seen a good volume growth there. So despite the weakness and the dampening demand sentiment, tell us what aided your volume growth and how much exactly was it?
Well, our volume growth was actually ahead of our value growth as we drove a lot of initiatives. But really, the underlying thing is innovation. For example, in fans, we introduced for the first time ever a revamped fan where we offered a 5-year warranty. On lighting, in fact, we introduced first to the world wonderful innovation, which is an antibacterial bulb, a light bulb, which actually also kills up to 85% of bacteria in the home, making it healthier and safer. So if you keep bringing in these meaningful consumer benefits, frankly, we've seen that consumers are even willing to pay a premium for it.
When you have been interacting with your dealers, your sales representative, what is the sense that you get in terms of volume growth? What is the sense that you get in terms of consumer sentiments for your products?
Well, our products, largely our products, pretty much necessities, right? You need a fan, you need a light, you got a water issue, you need a pump. So the fundamental demand stays, and even then, most of our dealers, most of our consumers who we talk to continue to feel that, yes, as long as the product is of good value, and it's really not it's not discretionary in that sense. You move into a new house, you need fans. When you talk about, for example, LED lighting, it continues to grow significantly in terms of volume and penetration because it is better value. You save on your electricity bill. So we've not really seen in our categories any significant change in sentiment.
What about the premium segments or the value-added segments that you were touching upon earlier? Have those categories seen any postponement of sorts or any impact at all given the slowdown?
Again, not really, because if you take fans, which as a total business grew in the mid-teens, our premium segment of fans grew significantly ahead of that at about 24–25% over the quarter. And again, you got to remember, we're talking about fans, so we're talking about a 3,000 rupee purchase and not a 20,000 rupee purchase. Most of our products also are not bought on EMIs, right? They are bought and paid for at point of transaction. So as long as the benefit is meaningful, and as long as the consumer understands the superior benefit, we think people are still willing to trade up in the short and, of course, in the long term.
Right. So, can you just talk to us about the feedback of the new launches? You mentioned about it in brief, about the fans, about air coolers. Can you just tell us what has been the launch? Has it been better than what you were anticipating or in line with what you were anticipating before the launch?
Oh, yeah. It's actually been significantly ahead, and again, it is about meeting consumer needs with innovation, because this air cooler we launched was a desert cooler. It's called Optimus, and it has significantly superior airflow, means it can cool more area. It also is designed in a unique way which makes it very easy to clean. And finally, it's an auto drain. So when you want to remove the water, it's very easy to drain it out as opposed to trying to scoop it out with a mug or something. And all of these things make value for the consumer. And in fact, our cooler business over this quarter grew 95% in volume and 138% in value, admittedly over a small base, because last year was a poor season for coolers.
Right. Just one more question regarding the margin drop in the lighting business and outlook for the lighting business growth to come back.
Well, there are two real reasons. One is we significantly stepped up advertising. So we spent, versus the previous quarter, almost 300 basis points behind advertising, because we do believe advertising is a required investment to continue to long-term grow our brand and build our lighting business. That was reason number one. And reason number two is half our lighting business is actually B2B. A large part of that which goes to governments, municipalities, etc. And during the election period, which was in the previous quarter, we did see a number of such orders get delayed and postponed, which we do expect that order backlog to come back in the forthcoming quarters.
Right. Mr. Shantanu, thank you so much for taking out time for us, telling us about consumer sentiments. Always good to get perspective from you and your perspective about how things are changing in the FMCG pack. That was, of course, a veteran of the FMCG industry, telling us about how their business is doing and, of course, what's the overall feedback from various other companies.